What's going on, everybody? My name's Jason and I'm here with X91Investing. In this video we're going to be breaking down all the most common pieces of FOREX jargon, or just the basic kind of terminology that I'll be discussing in the videos that you might necessarily fully understand what I'm talking about. So I've actually gotten a few messages over the last couple of days with people asking me stuff to do with the last live stream, and those kinds of things. You know, as things expand more and more, if I keep getting messages over and over, I won't be able to get to everyone. So I'm going to put out this video now just to break down all that jargon, the real basic stuff that you might stumble on in the videos. So look, we'll have a look now. Right, so lads, we're over here now on the Microsoft whiteboard. We've been using this for the last couple of videos. Why not keep it going? It's very, very handy for just drawing a quick little thing up before a video or whatever. I know, I suppose I could do it on paper and take a screenshot of it, or take a picture and upload it or whatever, but like, this does the job. So basically, right, we'll just crack on to it, starting off with the spot price. Spot price is basically the current price of the pair. In simple terms, we look at a chart, we see 0.0, say we're looking at Euro USD, and the price is 1.1962, right? That is the spot price. Plain and simple. What we see on a chart is the price, right? The book is just a list of orders, longs and shorts, limits, all the different limit orders, market orders, all in a big long list. And some brokers will give you a screener where they show you the proportion of buyers to sellers and all that kind of stuff. But yeah, in simplicity, when what actual information is on it, you'll have the ticker or the pair. So if you're trading Tesla, say it was stocks, you'd have TSLA, you'd have the amount, the price you bought at, and the amount of stock that you're after buying. With Forex, you have the pair, the lot size, and the price you entered, and whether it's a limit or a market, or whether it's a long or a short order. Bid and the ask. So the bid price is the current sell price. I'll just read it and then I'll give my explanation. So it's the current sell price. When we look at any chart, the price we're seeing is the bid price, right? Because in history, before shorting was even a thing, everything was about ride the wave going up, right? Just take the momentum and make profit off that. And we look at the chart and we see, the reason we want to see it is when we enter a position and you're in MT4, say for example, you enter your position and you see the bid price, but when you enter, you enter at the ask price because it's the current buy price. So you're buying at the ask, right? And you're selling at the bid. So when you buy or go long, you're entering at the ask price, which is above the bid. So it might be a little bit confusing for anyone that's starting. You might say, oh no, I entered here, but why is the price up here? So like, you're entering at the bid, so the ask has to come up and pass out the bid to actually put you in profit. So but when the line keeps going up and going up and going up, you're seeing the bid price, and whenever you pull out of your position, you're getting it at whatever price you see, rather than it jumping down below it or whatever. So when we take a long position and we take the position, we think we're taking it here, but we're actually taking it at the ask, which is slightly above it. And then the reason we keep the bid price on the chart is so we're taking our profit exactly where we intend to take it. So we're not getting bid and ask, we're not losing the spread basically off our profit, and we're taking the profit where we want it. The ask price, as I said, it's the current buy price. So when we short, we're going to short at the bid price, right? So we want to short. We think we're shorting here, but the price will actually be here. So the price actually has to travel a little bit further to put us in profit. So we're automatically at a loss. But then if our position goes our way, so when we open a position, we automatically lose the spread. The spread is lost. That's how the spread comes into trading. So we automatically lose the spread, and that's the broker takes it, whatever. That's the money lost straight away. But we need our profit to actually cancel out that first. Then we get into profit. So that brings us to the spread. The spread is the bid, ask minus the bid. So it's just the ask is always above the bid. So it's just the ask. So if the ask, say to put a stock, we have 12. Say the stock is trading at 12 and the ask or the bid price is at 8, right? This is extreme, but the spread in this instance would be $4 or €4 or whatever, right? So that's the spread. When I mention a base currency, I mean by a base currency is it's the currency on the left. So when I mentioned the euro against the dollar, just take the example that I have on screen. The euro against the dollar, the €1 gets me how many dollars? So when I say the base currency, it's the one, the whatever we're using of one of the native, comparing it to another currency. So €1 will get us today at this point in time. I think it's 19.21. Just before the video, I was looking at a few charts or whatever. So yeah, I think the euro dollar is trading in the 1.19 range. 1.1971 I think was the highest it got to today, and it's trading down around the 1.19 level now. It's about half four in the afternoon, so we're down around that level now. But the base currency is the currency on the left, right? So when we talk about the quoted currency, it's the currency on the right. So a lot of this stuff is fairly self-explanatory, but this is for the people, as I said in the intro, that might be a more new, and some of the jargon that I'm saying, you mightn't fully understand it. So the quoted currency is the currency on the right. It's the will get me how many of this currency, right? So €1 is the base currency, and the dollar is the quoted currency. The dollar is quoted. So I have another one down here. Where did I put it? In pair. So a pair is one currency quoted against another. So a pair is the dollar quoted against the euro, right? That's the way we'd say it. The dollar is quoted against the euro, so it's kind of backwards, but it's the euro dollar pair. So, but it's the dollar quoted against the euro. So right, we'll move on to strategy. So when I mention a strategy, it's your trading plan. I have a book over there where I write all my strategies down, every single thing: entry reasons, exit reasons, bailout clauses, entry reasons. I think I already said that. Entry reasons, position sizing, the way I calculate position sizing, the whole lot, risk management, all that stuff is written down into that trading plan. And I have a plan for all my different, say, mean reverting, pair trading strategies. I've been trading a lot of stocks lately, so I've been working on my mean reversion and pair trading strategies a good bit, getting those up to speed. My forex trading strategies have remained fairly consistent, minor tweaks every couple of weeks or whatever, with changing things with vaccines and different currencies strengthening overall and whatever in the more recent time. So then we'll move down. So that's basically what a strategy is. It's basically a set of rules. You have your set of rules, stick to your set of rules. It's the most important part of trading. If you don't stick to your rules, nothing will work. You will always be complaining that you're not in profit. You'll be always a break even or even in a loss. You'll be always saying, no, the financial markets, they don't work, all that kind of stuff. So we'll move from strategy down to lots. So what a lot is a particular amount of a currency. So lots can be broken down into two different categories. So we have volume and lots, right? So if I'm talking about a standard, right? A standard is 100,000 units of currency, or one. It's referred to as one lot, right? One standard lot. When we talk about a mini, if I say a mini lot, I'm talking about 10,000 units of currency, or 0.1. So when we type into our trading platform or whatever, I want one mini lot, it's 0.1. Some places will ask you for the volume. Some brokers will ask for the lot. Some brokers will allow you to enter either. You'll just have to specify, because if you put in 0.1 but it wants the volume, it'll think that you want it'll think you want 10 cent of the currency, which is fairly ridiculous. If you take 10 cent, you're not, a couple of pips will only be a couple of cent. Do you get me? So or not even very, very minuscule amounts. You'd have to move a very, very substantial amount of the currency to actually make anything on such a small lot, which most places will not even leave you. Well, I don't think it's even possible to trade that, so forget about that. So micros, which would be more for the small accounts, you'd be trading 1,000 units of currency. So or 0.01 lots, right? And that's as low as it gets. I have nano written here, and it's in brackets for a reason. A lot of brokers won't leave you trade nano lots, right? Because micro lots are where the cutoff is. You're not expected to be trading, even with leverage involved. A micro lot is going to be in the territory of what you're trading anyway. I'll be bringing out a video about leverage in the future, but with nano lots, it's not really worth it trading with nano lots for the minuscule amount that you're going to be making off that amount of volume on a trade, it's, you know, you need substantial movements every day on a currency, and there's, other than cryptos, there's nothing volatile enough to be able to trade that kind of a lot size. So like, it's all proportional to your account size. So if you have a small account, you're going to be trading micro lots. If you're trading mini lots, you have more capital to trade. So micros would be small accounts you'd have. So micro would be anything up to, say, I'd consider a small account anything up to, say, 5,000. Would be a small account. From 5 to 20, I'd say, would be a fairly moderately sized account, and then 20 to 50 to 100 would be a full size trading account, if you get me. And a lot of those numbers will scare the living daylights out of a lot of you, but that is the reality of the game. Up until you're up, I'd say about up until when you get to the €5,000 account range, that's when you're talking of moving into the next kind of bracket. Like, some people would even say, oh, no, 5,000, nah, you're not trading properly with 5,000. Like, with smaller accounts as well, to grow the account at a rate where you're going to be really feeling like you're doing something, and it's going to be worth your while. You're going to be risking a little bit more. Personally, I stuck to a 2% risk when I started with the smaller account, and built it up over time using proper risk management. I myself have never blown a trading account, and a lot of people I hear on YouTube saying, oh, the first account I blew. It's a good video to look at, because people are blowing accounts left, right and centre, not watching their risk properly. And I've seen even some of them inconsistent facts in the videos would lead to the video being completely just false, made up just for the point of the video. I'd rather say, like, the way I do it is give the example of how someone would blow a trading account by not following risk management, and not by making up something saying that I blew an account. I've never blown an account because I've followed proper risk management, and it was one of the first videos I actually watched. So before I even opened the demo account, I was trading with proper risk management. And what I got a question there during the week: do I actually trade live? I do trade live. I also trade demo. Demo is actually more important than your live trading account. You need to test every single strategy and backtest you backtest your strategy, then you trade at demo. If it fails demo, you go back and backtest. Make your improvements and you bring it then to the demo. If it works on demo, then you can bring it live. But any strategy that I have implemented, I have all my dead strategies in the book. I have loads. I'll actually do a video on that particular book in the future, maybe on Patreon. Because it's a good part of the course, because there'd be a whole section of the course on trading plan and developing your trading plan, so that might be a good one to put in on that. Right, so we'll get back to the things on the screen. So that's the thing to do with lots. I kind of went a little bit rambly there, but you can forgive me for that. So we're on lots. So pair. So we said pair. An indicator is a mathematical equation or a formula that calculates a value, and that value is plotted on a graph, right? So we have the likes of the simple moving average, exponential moving average, the RSI indicator, so the relative strength index. You have the ATR indicator, the average true range, and loads of different other ones that they all look. They're all part of trading strategies. They don't form a strategy themselves. Like, some of my strategies would have to require the RSI over a certain value. Or another strategy might require the RSI for entry reasons, and then you'd have ATRs for setting stop losses. The ATR would show the average range of the it's a volatility indicator, so it'll tell you how volatile it has been over a set period that you have set, and various things like that. So that's the basics of an indicator. So if I refer to an indicator, I mean it's one of those mathematical formulas. You have, like I said, the moving averages and the different strength indices and all that kind of stuff. So bullish and bearish, we went through these before. The bulls, it's price going up trends, green candles. Bearish trends, down trends, red candles. Overall loads of selling pressure. Bullish, loads of upward pressure. If you've been here for the live sessions, you well understand that at this stage, but it's always good to go over, and it is the absolute fundamental basics of any form of trading, even just trading chat. Like, bearish and bullish. Oh, how do you feel on Tesla at the moment? Oh, I'm feeling kind of bearish. Oh, it's approaching that level. I depending on how it reacts, that'll alter my sentiment on the. When I refer to sentiment's another thing. If I refer to my sentiment, what I mean by that is how I feel about a stock. So if I say, if someone asks me, oh, what's your sentiment on Apple stock? I might say, oh, I'm bullish on Apple at the moment. That's my sentiment. And if you go on to investing.com, they have a page on nearly any stock or currency pair. There's a thing up at the top, and I think it's investing.com, and you can click the bull's head or the bear's head, and that'll just basically, if you have an account, I think you need an account to actually be brought into that. But you click either one, and if you click bull, you're bullish, bear, you're bearish, plain and simple. But look lads, that's the absolute basics. That's absolutely not everything by any stretch of the imagination, but that is the main few bits that people have, a few of the things that people have asked me over the last week to explain to them privately, what different things that I've said mean. That's me breaking them down in layman's terms. These are little things to spark my mind thinking, and then I can kind of ramble a little bit about each of the topics. But look lads, thanks very much for joining me for this video, and look, I'll see you again soon.